So today is the first episode of how to becoming a prop trader in 2026. I will do here on YouTube 5 episodes, and the first one right here is all about how to even play prop firms. So I will say we jump here straight into Millernote and I show you exactly a game plan how you can play the prop firms in 2026. So I would say let's do this. So guys, right here I've taken some notes, and why I'm choosing here how to play the prop game in the first place is because if you don't stick to these rules, to these easy rules, then you will probably fail over and over and over again. And you're stuck in this hole where you're always paying evals, you get funded, and then you blow your account. So you really need to stick to this blueprint right here that I'm giving you, and you can follow along on my next episodes when I'm giving you market structure, volume profile, order flow, and all that good stuff. And then you can combine all these episodes to learn and evolve in your trading. In the first place right here, what we are looking out for is our basic structure. Now, that's my exact approach that I'm doing with prop firms, right? That's all right here that you see. It's all about PA accounts, right? It's live accounts, or let's say PA accounts, right? It's not evals. Why I'm saying this, it's not evals, because you should not spend months on evals, even if you are a beginner. I'm saying this because you learn on PA accounts, and that's the truth, guys. Yeah, of course you can trade evals and get in touch with trading, but the real emotions are on PA accounts. And that's why I'm also saying beginners should, as quickly as possible, get funded and trade on PA accounts. Then you can learn from your mistakes and evolve on there. Now, on basic structure, we have here 2 examples. Now I'm treating this with 2 accounts because I assuming that you want to start out a little bit less, right? And you only need here 2 accounts to purchase. You can also do this with 20 accounts. If you have a little bit more experience on prop firm trading, then of course you can do here 20 accounts with Apex, let's say, right? But right here, this whole example is with 2 accounts. So let's say you have 2 PA accounts, 50k. So the account A right here is the conservative. On this specific account, our goal is to be consistent. The next one right here is the account B, and the account B is aggressive. We are looking here for high returns, right? So you get the point. I have 2 accounts. The first account is less risk. The second account is high risk. Now, let's not say high risk, we are looking for higher returns. How we can play this now? First of all, you can look out for your setups, right? Whatever it is it the orb strategy or something else? But how you can play this right now is you put on a group and you set your first account to 1 contract, right? So I'm saying here 1 contract. You as well can do this with micros, but for right now we are looking here for 1 contract and 2 contract. Now what you can do right here now is you set your account, the safe one right here, with 1 contract, right? And your second account with 2 contracts. So every time you place a trade on your safe account, the trade is copying to the account B, and you get here 2 contracts, right? So the aggressive one right here gets 2 contracts and your safe one gets 1 contract. So you click buy on TraderWeight, 1 lot goes to account 1 and 2 lots going to account 2. That's how you can play this section right here. I am preferring, and what I am doing is this right here. So on my safe account, I am looking for B and C setups, right? Because I'm risking here less, right? And on the aggressive one, I am looking for A plus setups on the account 2 right here. Now why I'm doing this, it is because you not always get every day a setup, right? It's not happening. You probably often than not get a B and a C setup. So when a setup develops, then I'm definitely looking out for high returns. So that's not meaning that I'm not taking A setups on the account 1. I'm definitely taking A setups as well, but it's often than not we have only B or C setups, then I'm only going with the account A right here. Now on the account A, you always look out for 0.5 0.25% or 0.5%. So that's $125 and $250 per trade, right? So the max you should risk right here per trade is $250 on the account A. On the account B, on the other hand, we are looking out to risk $500 often than not. So when a setup occurs, I often use 500 as my risk per trade and not 250. Now why I'm doing this, it is because on account A or group A, I want to be consistent. I want to build profits, right? But on the other hand, you want some payouts, right, as well. So, and to get quicker payouts, I have an account B, and that's the aggressive one that I'm looking here for higher returns, but it's also higher risk right here. So you have here two accounts that you can play on this section right here. Now when it comes here to risk management, we are looking for group A of a maximum loss of $500 and on group B a maximum loss of $750. If you hit this on your day, the minus 500 on A and the minus 750 on B, then you are going away. So that's right here is really the max risk that you can lose on a day, right? So this right here, you not should go above it. If you go above it, you have a high chance to blow your accounts. So don't get me wrong, guys, you probably will blow PA accounts, and that's the truth. Why I'm saying this is because you don't play 50k account, you play a 2.5k account, because your maximum loss limit on a 50k account is $2,500. Now of course, if your account balance goes over 52,500, then you can build more and more and more of a cushion, but you really need to take out some profits. You really need to get to a payout as often as possible with prop firms. Now of course, if you are fine with purchasing a 50k account and just trade it for 5 years, then you can do this as well, but most often than not we want to put out payouts on prop firms. But let's stick here to the risk management rules. So we have said 500 on A and 750 on B, and then you go away. If you're losing 2 days in a row, then you definitely should reduce risk. That's so key. Most of the time you guys switch this, right? You're losing 2 days in a row and then you're increasing risk, but that's not what we want. That's really not what you want. You want to stay in this game as long as possible, and the only way is to reduce risk if you have a losing streak. That's so key, guys. And as well, no revenge trading. If you lose this right here, then you go away. No matter what, you go away. You go on with your day, you go to the gym or do something else, or you go on a walk or whatever it is, but you go away when these red numbers hit right here. So both groups follow the same discipline, right? Here 500 and here 750, you go away. Now how we can now scale this whole scenario right here is if we get payouts. So let's say the aggressive one right here goes really well, right? And we get the first payout on 50k. The maximum payout you can take is $2,000. So what you should do now, you should reinvest part of the profits to buy another prop challenges. Now you should definitely add accounts slowly, 2 to 3 at a time. Now how you should play this if you get new PA accounts is to grow group A first. What I'm saying is if you're buying, let's say 3 accounts, 2 accounts go to your safe account and 1 account goes to the aggressive one, right? Because the aggressive one with high returns is as well high risk, and you want to stay in the game long enough. If you're getting more comfortable with aggressive trading, if you're getting more comfortable with your whole trading as well, then for sure you can purchase, let's say 2 accounts, 1 goes into the safe and 1 goes to the aggressive, and you can play this with 10 to 10 accounts, right? So here 10 accounts and here 10 accounts. Now I've said that this episode right here is one of the most important one that I'm uploading right here, and that's really true, guys, because if you really don't stick to the risk per trade or your daily loss limit right here, then you are screwed, right? It's It's the truth. If you don't stick to this right here, what you are doing then is just gamble your PA accounts and hope for a payout. And that's not what you want. You want to grow as a trader, you want to learn as a trader, and if you fail some PA accounts, then so be it. Purchase another one and learn from your mistakes. Do it often enough that you are comfortable with your trading. This right here, the prop firm risk management right here, is the importance of trading. If you don't follow these rules on the first place, you will not be able to get to a payout. And if you get to a payout, then you probably had luck. On the next episode, we go over market structure and then indicators, then volume profile, and then we are going to order flow and tools I am using. I hope you found some use in this video. If you do so, hit the like button, hit the subscribe button, and we see us in the next episode. Peace.